Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Scott Nations, President, Nations Indexes. Thank you both for being with us. Scott, before we get to Caterpillar, your first trade today, tell me a little bit about the market as we're hitting some records this week. I know everybody's watching for S&P 5,000, but how are you feeling about 2024?
I think it's interesting that in February, the markets managed to rally, even though 10-year yields have spiked up. I mean, got well above 4%, and that's been really impressive. You know, last year everybody was worried about 5% in the 10-year yield, then we got a really nice break in yields, and I think that really helped the market in the last quarter of last year. And so the fact that we can continue to rally even though yields are up a little bit now is really impressive, Nicole.
Yeah, okay. That being said, you're feeling a little bullish on Caterpillar, which is around 323 today. Tell me a little bit about that.
Yeah, they just announced another beat, 15 quarters in a row. EPS has beat consensus estimates. It's just a beautifully managed company that's really working well. Double-digit percentage increase in operating margins. That's exactly what you want to see. And that means that what they're doing is really at the core of the business. It's a buy because I love when the business is working well and the stock's rallying for fundamental reasons, not some sort of financial engineering. Forward PE, relatively cheap at 15.3, which is actually cheaper than the last 12-month PE. So you're getting a relative bargain. Some people are talking about a dividend yield of 1.6%. I don't think that's much to write home about, but the company is just doing really well. I love the space, firing on all cylinders. Doesn't matter if it's cat or deer. They're both great buys right now.
Okay. Pretty impressive when you talk about those 15 quarters of EPS beats. Ben, your thoughts on the Caterpillar chart, please.
Yeah, wait till you see the acceleration the stock saw throughout that 4-year period that Scott was talking about. And as we take a look here, you're going to see not only on the longer term, but also on the short term, we're seeing a very well-defined trend to the upside. Scott mentioned this company's doing well, the stock's doing well also. Take a look here. First and foremost, since the middle of January, the stock was trading down around 276. We've seen it rally all the way up to 337. Now, you can see the intraday volatility that occurred in reaction to the earnings release, but how we've been basically holding this upper level since. Now, Nicole, Scott, I like to establish these areas of value that have formed on the way up to help us determine trend. Clearly, value is moving higher, right? You can see 4 areas established. We're currently balancing around 325. I think the bulls are in good shape as long as we hold above 300 right now. This is a 15-minute candle chart, again, going back to the middle of January. So let's not put too much credit into this one. Let's take a step back, and I'll show you, again, adding a little time on. We've got a 4-hour candle chart now, and we're going back to the end of October. So last fall, when rates topped out, as Scott mentioned, up around that 5% level. Look, here you can see this stock has done well since then, around 220 all the way up to, again, we just mentioned 337. In a similar fashion to that 15-minute candle chart on the 4-hour, you can see areas where the market has rallied from. This is the move that we just looked at on the last chart. So again, from this 275 area to 337. So we're adding some time on. You can see again going all the way back to middle of October, beginning of November last year. But you're also seeing a very similar pattern, right? Trend to the upside. One more step back here. I've got a weekly candle chart, and you're seeing a similar depiction play out here. Just taking a quick look here at some of the areas where the market's paused. Look at this vertical breakout we're seeing right now. This is a high conviction move. I mentioned over the last 4 years here, we've rallied basically from $80 all the way up to, again, this 330 level. So a lot of conviction associated with this move here, a lot of conviction associated with this breakout and initiative phase, exactly what the bulls were looking for.
All right, thank you for that, Ben. So, Scott, how would you go about your trade for Caterpillar?
Well, I don't think there's anything wrong with just buying the stock here. And we're going to talk about another stock where, in just a moment, where I wouldn't do that. But, you know, there's nothing wrong with buying the stock here. If you want to put a bid slightly below where the market is, that's one way to do it. I wouldn't sell puts. I'm normally a big fan of selling puts to buy stock at a discount. I wouldn't do that here only because the catalyst is passed. And so that vol crush is passed. You're not going to get that once because the catalyst is passed. But there's nothing wrong with buying the stock here. There's nothing wrong with buying it putting in a bid a little bit lower.
Okay. Next up, Disney. A lot of talk about Disney today after its quarterly report, and has had a good reaction as well, of course. Your thoughts on Walt Disney today?
Yeah, they just beat on earnings. They raised the dividend. They're doing well all the way around. And they actually have some good news from activists. I think the fact that the activists are involved is actually a good thing. I think it's easy to say that Bob Iger doesn't need anybody looking over his shoulder, but that said, the company does need a little bit of help, and it's sometimes good to have an activist involved. And I think that's the case with Disney. The new sports streaming service that they announced is interesting. Streaming has not always been a big success for some of the new streaming services, but this is interesting. So I'm bullish on Disney, and I'll talk about how I would affect that in a second. Forward PE 23.5. It's not exactly cheap, but over the next 3-year, EPS growth is expected to be about 16% annually. And so I think you'll get the growth you need to buy a 23.5 PE stock. Stock is up a ton today on the results. I would not rush in and buy it at current levels. I would definitely be a buyer if we can get a little bit of a pullback, though, because, again, it's another stock, another company, really well managed, great leadership space in their sector. And so it's a great company. You can't run out and buy a stock that's $10 higher.
Right, understood. And we're going to have a great panel later in the show all about Disney, so stay tuned for that as well, folks. Let me hear what you think, Ben, about the chart, please.
Yeah, I'd agree with Scott. Tough to chase this one today considering the move that we've seen, but also, if this is truly a bottoming pattern, which is the argument I'm going to make in terms of the longer-term time frame here, then you may not get a lot of chances just to buy that pullback that Scott mentioned. You may need to be a little bit more aggressive in terms of approaching this one. So let's just start here with a 30-minute candle chart here, the rally that we've seen over the last few weeks. It really speaks to some of the conviction. You can see the two phases of development that the market transitions from into one from the other, and the beauty of it is there's really only two. So sometimes more easily identifiable than other. In this instance, it's pretty well defined here. You got 4 areas of consolidation, recently breaking out of that range around 97 in reaction to earnings. A brief pause around 106, but look at this, off to the races here. In fact, as we speak, we just made a new high right here at 110.88. So again, this stock here is holding on to the gains that we've seen. No rejection of the move up in reaction to earnings. Now let's take a step back. I want to show you what's going on because we're going to add a little time here and see two things. One is another well-defined trend going all the way back to October. But look, earnings in November sent the stock in a very similar fashion, right? High conviction, breakout phase, transition to another horizontal phase. We basically just waited for that next major catalyst, the news event. And when did that occur? Well, most recently, again, with the earnings. You can see, let's identify some of the areas of consolidation. Again, we're talking about an hourly candle chart here. So as we take a look, you can see most recently breaking out of, again, 97, holding above these key areas that were established on the way up. It's kind of like the path that the market leaves us in this attempt to go higher here, and it looks like it's being very successful. I've got another chart for us here. Let's move away from the hourly candles, the move that we've seen since the beginning, end of October, beginning of November. And this is what I was talking about a minute ago. If we are truly bottoming out, we've got daily candles here, Nicole. I want to show you what it looks like. I can understand the bullishness Scott's seeing with this one because it does look like we've now invalidated a trend down, right? We're going all the way back to, we're talking March of 2021. And you can see, well-defined, migration of value to the downside, recently balancing around 82. And while we were balancing around 82, the bears were expecting a breakout below, a new area to form at a lower level. What happens instead? We take out 100. That was the middle of that last area of balance, that reference point that the bulls had in terms of establishing if we're still trending lower. Doesn't look like we are to me. Again, trend lower and validated back above 100 is what I'm seeing.
Whoa, I think Disney shareholders would like to hear more about that. I mean, they get their dividend increase, buyback, and now the trend invalidated. They love that. Scott, final thoughts on this trade here?
Again, it's tough to reach and buy a stock that's up, now $11.50 on the day when it was, when that is such a big move. but sometimes you're going to have to pay up to buy a great company. What is it Warren Buffett says?
Yeah.
I'd rather pay a fair price for, or a good price for a great company than a great price for a good company.
Okay, all right. And then what about Nvidia? How do you feel the price is there?
Wow, Nicole, this is the darling of the stock market. It's the most magnificent of the Magnificent Seven, up 215% in the past 12 months as everybody looks to Nvidia as the bellwether for AI and machine learning. Now a $1.7 trillion market cap. I can remember when we were talking about Apple maybe managing to break into a $1 trillion market cap, and now we have several of them. And Nvidia, $1.7 trillion, just really, really, really impressive. But Nicole, boy, has this come really far, really fast. And in front of the earnings that they're due to report on February 21, if you're an owner, if you own the stock already, there's something interesting that you might want to pay attention to. And this has gotten so frothy that investors are really, well, traders actually, are really, really bidding up call options, out of the money call options that catch that earnings announcement. So again, they announce on the 21st. So the 23rd expiration, the February 23rd expiration, we can collar up this stock if we own it at a really advantageous prices. So earlier today with the stock right at $700, it's up a little bit more since then. We could buy the $100 out of the money put, that is the 600 strike put, for just $4.70. And we could sell the $100 out of the money call, so the 800 strike call, for more than double that. We could sell it at the time for $10.80. So if we own the stock, we can put on this collar. I would never do this unless I owned the stock because we're going to be short a call. We can do that. We can collect $6. And if the stock doesn't move more than $100, we keep that. It's ours to keep. And we put on a collar. So if something is just not right in earnings and it falls quite a bit, then you have some protection. And for a stock that's up 215% over the past 12 months, I think that makes a lot of sense.
And hitting new all-time highs today of 707.94. I mean, it's unbelievable, right? You said the most magnificent of the Magnificent Seven. Those were your words, and it certainly has proven itself, as you noted, almost 220% gain over 1 year. So, Ben, you hear about this collar trade, and so your thoughts on this chart, Ben, please.
Yeah, Nicole, I look at this chart and I think about when my kids' are studying technical analysis 101. They're going to look at Nvidia to establish what does a trend up look like, right? It's pretty well defined here, easily identifiable across multiple time frames. As Scott mentioned, there's some bullish sentiment associated with this stock, that's for sure. Let's begin first and foremost with just the last few days of price activity. We're talking end of last week into current levels here. We've rallied all the way up from 616 up to above 700, and we're currently holding that right now. So you guys know, in addition to areas of consolidation, areas of value, the other thing I like to look for is acceptance or rejection, right? And in this instance, it looks to me like we're accepting price at this higher level, again, above 700. But it looks to me like we're kind of bouncing around 690 as long as we hold above 660. The bulls are in pretty good shape at this point. The other thing I like to see is these tests of the key areas that were established on the way up hold, because that gives the bulls confidence that they're positioned with the trend properly if they're looking to be part of this longer term move that's been going higher, right? It's not just over the last few days. Take a look. We're now going back to, we're talking about when the stock was trading down around 460, 470, all the way up to, again, 700. I mean, that was back in the beginning of January. Now we're looking at a hourly candle chart here. Let me just show you what's going on as far as this move to the upside. Areas of consolidation that have formed at higher and higher levels. There's the one I was looking for. You can see how we're currently balancing around the 690 level, and very bullish here in terms of this pattern, right? Bottom left, top right, migration to value, tests which have held key areas, currently break out of 610 level where we go sideways again. Yeah, a bit of a double top up here, maybe even a triple, but all of this very much here, acceptance of the move that we've been seeing. We talked about it again over the last few days, the rally from Friday to current levels, but this is really acceptance of the rally we've seen this year. One more step back has, again, that bullish narrative written all over it. Look at this, a daily candle chart here. Let me show you some of the areas that my eye was drawn to in terms of consolidation, and look at this high conviction trade that we're in right now. I mean, this is about as vertical as we can get here. This move that we've seen to begin the year, break out of that balance that formed around 455. It does look like briefly we paused right there. You could maybe argue there was some overlapping consolidation, value forming, but it does look to me like this is, again, a stock that's seeking value to the upside in a trend environment that's been higher.
All right. Thank you both so much for the big three today. A lot of fun. Caterpillar, Disney, Nvidia, Scott Nations of Nations Indexes, and Ben Lichtenstein. Thank you both for being with me. Appreciate it.